Imagine this. You walk into a tea stall in a small town in India, hand the chaiwala 10 rupees via your phone, and within a second, the money travels across encrypted digital rails, touching systems that rival the efficiency of Wall Street, all without a single coin exchanged. Now multiply that moment by billions, because in November 2025, India's Unified Payments Interface, or UPI, just broke yet another world record. Rs 27.28 lakh crore in digital transactions. That's about $325 billion in a single month. Welcome to Beyond Binary, where we decode technology, geopolitics, and the economy through facts, context, and a bit of perspective. And today we're diving into India's Rs 27 lakh crore UPI boom, how a digital payment system born in Bengaluru is now reshaping the global financial order, and what that means for the next phase of the cashless economy. To understand how we got here, let's rewind a bit. Back in 2016, India made a bold move, the demonetization of Rs 500 and Rs 1000 notes. It was controversial, but it forced millions of Indians to explore digital alternatives. Then came the launch of UPI, the Unified Payments Interface, by the National Payments Corporation of India, NPCI. What made UPI different was its simplicity. It wasn't a wallet, it wasn't tied to any one bank, and it wasn't just for the elite. It was open source, interoperable, and instant. You could send money from any bank to any bank, anytime, for free. In less than a decade, that small idea became a financial revolution. From metropolitan malls to rural markets, UPI became the new normal. Street vendors, vegetable sellers, cab drivers, all suddenly became part of a digital economy. And then just a few months ago, something unprecedented happened. The UPI shutdown of 2025. It was a Saturday evening in August, and suddenly, across India, UPI transactions began to fail. QR codes weren't scanning, payments weren't processing, businesses froze, cabs couldn't start trips, and online orders failed. On X, formerly Twitter, your UPI shutdown started trending within minutes. But what exactly was a shutdown? In technical terms, it's a temporary system-wide halt, often caused by server overloads, infrastructure updates, or cyber vulnerabilities. Think of it as the digital version of a nationwide power outage, except instead of lights going out, the economy flickers. In this case, the cause was traced to a critical overload on NPCI's main transaction switch, combined with a cascading software error in one of the major bank's back-end systems. Essentially, India's real-time payment system had grown so fast that the existing infrastructure just couldn't keep up. For a few tense hours, India's most trusted digital backbone was offline. The Reserve Bank of India intervened, and emergency protocols were triggered. By the next morning, systems were back up. But the event exposed something important, that India's fintech growth, while groundbreaking, was outpacing its own infrastructure resilience. And yet, in classic Indian fashion, what followed was nothing short of remarkable. Within weeks, the system was not only stabilized, but upgraded, with new redundant data centers, AI-driven load balancers, and enhanced security patches. The incident became a wake-up call that transformed into a technological leap. Cut to November 2025, just 3 months later, and UPI didn't just recover, it hit its highest ever monthly volume. Rs 27.28 lakh crore in transactions. Let that sink in. That's more than the GDP of Finland. This isn't just a fintech story, it's a geopolitical one. India's model of digital public infrastructure, built on UPI, Aadhaar, and the open network for digital commerce, is now being exported globally. Japan recently piloted a UPI-linked QR system for Indian tourists. The UAE, Singapore, Nepal, and France have all integrated UPI-based payments. Even the US and UK are in talks for limited cross-border interoperability through fintech collaborations. What's fascinating here is that India didn't privatize this revolution. Unlike Apple Pay or PayPal, UPI isn't owned by a corporation. It's a public digital rail, regulated but open. That's what made it scalable and inclusive. The world is watching because India has managed something most economies still struggle with: democratizing digital payments without excluding those who don't speak the language of finance. It's technology as a public good. But let's zoom out for a second. What does a Rs 27 lakh crore digital flow really mean for the economy? First, it means efficiency. Every digital transaction eliminates friction. No printing costs, no counterfeit risks, no handling errors. The velocity of money increases, which can boost GDP growth. Second, it means transparency. With billions of digital trails, tax evasion becomes harder, and financial inclusion improves. The government can track economic activity in real time, making policies more responsive. Third, it means data, and data is power. India's digital economy generates insights that can predict consumer trends, inflation shifts, and even credit demand, giving policymakers and fintech startups an enormous advantage. But there's a flip side. With so much digital dependency, cybersecurity becomes national security. A large-scale hack or prolonged outage could cripple not just payment systems, but entire supply chains. That's why the government and NPCI are investing heavily in quantum-safe encryption and edge computing nodes to reduce single points of failure. The UPI shutdown of 2025 showed us that even the most advanced systems need fail-safes, but it also showed something deeper. India's digital backbone is not fragile, it's adaptable. Within weeks, confidence was restored, and users came back stronger. What makes this story even more interesting is that UPI's growth isn't slowing down. From 150 million monthly users in 2020 to over 650 million active users today, it has become the world's most used payment system. And with the recent launch of UPI Lite X, enabling offline peer-to-peer payments even without internet connectivity, the next billion transactions could come from regions that were previously disconnected. So where does this go from here? Experts believe the next frontier isn't just payments, it's programmable money. Imagine government subsidies that are automatically credited and can only be spent on specific items, or instant cross-border trade settlements between India and Japan, bypassing traditional banks entirely. UPI is no longer just a fintech story, it's an instrument of economic diplomacy. Countries are studying the Indian model not just for technology, but for the governance philosophy behind it. Digital public infrastructure built for everyone, not just the elite. And that's why this Rs 27 lakh crore record is more than a headline. It's a milestone in how India is redefining the digital economy, not by following Silicon Valley, but by building something uniquely its own. As we look at the graphs climbing higher and QR codes spreading further, it's clear. India's cashless revolution isn't about killing cash. It's about creating trust in a system where anyone, anywhere, can transact instantly and securely. From a roadside tea stall to a global tech summit, that same UPI chime, payment received, echoes a story of resilience, innovation, and ambition. And that's what makes this moment historic. Because when Rs 27 lakh crore moves through a system born out of a developing economy, the world has to stop and take note that the next chapter of global finance may just be written not in dollars, but in digital rupees. This is beyond binary, decoding how technology, economics, and geopolitics converge to shape our future. If you found this deep dive insightful, don't forget to like, share, and subscribe, because the next digital disruption might already be happening, and we'll be right here to explain it.